very good morning. You're tuned into Market Cafe with me, Lisa Fernandez, and with me I have Snehi. Very good morning to you, Snehi.
Good morning, Lisa.
And during the course of the next 1 hour, we take you through what's trending on the international market as well as keep you ready with the cues, brokerages, announcements for the upcoming trading session. So let's start with the international handover coming in, and Snehi has tracked it closely for us. Snehi, a couple of days back we were talking about the Santa Claus rally. You said that we spoke too quick, so do you take your words back now?
I think I might just have to take my words back, Lisa, because, well, we've also seen some global central bank action coming in, so we'll talk about that as well. And on the back of that, I think global equities are also doing pretty well. So let's start by looking at the US markets. Wall Street. US stock futures were little changed on Thursday night after the Dow Industrial Average notched a fresh record, heading for its best weekly winning streak since 2019. Now, Wall Street is coming off yet another fresh record high for the Dow on Thursday after notching its first ever close above that 37,000 mark on Wednesday. Now, the 30 stock benchmark rose 158 points, or almost 0.5%, to close above 37,000 at 37,248. The S&P 500 also gained 0.3%. Nasdaq also up 0.2% in trade yesterday. Now, the S&P 500 could soon join the Dow with its all-time high as well. The broader index is less than 1.6% away from a record close set in January of last year, that's January 2022. Speaking about the Nasdaq is roughly 8% away from its highest ever close and about 9% from its all-time intraday high as well. So, well, Nasdaq has some bucking up to do. Stocks rallied this week after the Fed Reserve on Wednesday admitted that its efforts to tamp down inflation are taking hold and indicated 3 interest rate cuts in the coming year 2024, buoying investor sentiment. The November retail sales data also came in stronger than expected yesterday following this week's cooler inflation readings. This also added hopes to the Fed Reserve that the Fed Reserve could navigate a soft landing. All of these cues have panned out very positively for Wall Street when it comes to the equity side of it, and Treasury yields also have plunged this week. What's key to note is that the 10-year Treasury fell below 4% for the first time despite topping 5% in October. It closed at around 3.96%. The major averages are headed for their 7th straight positive week as well. As of Thursday, the Dow is higher for the week by 2.8%, S&P up 2.5%, and Nasdaq up 2.5% as well. So, well, very rosy picture looking for Wall Street when it comes to the US markets. Let's shift focus and talk about Europe then, because European markets also bounced on Thursday as investors reacted positively to the US Fed Reserve signal that interest rates cuts could take place next year. Now, the Pan-European Stock 600 index closed up almost 1%, having earlier hit its highest point since Jan of 2022 as well. Let's talk about some central bank action then. Bank of England has held rates constant. European Central Bank also on Thursday held interest rates steady for the second meeting in a row as it revised its growth forecast lower. So, well, this is all the action that we've been getting in from the global market. But, well, Lisa, crude oil, also a space that is, seeing a lot of momentum. So, take us through that.
Yes, gains were seen in the US market as well as gains seen in crude oil prices as well, because the US crude oil that rose 3% and it extended the previous session gains, and this is coming on the back of a slightly improved global demand outlook for 2024 as well as a weaker dollar. Now, the international agency, energy agency, they said that the global oil demand that would grow by 1.1 million barrels per day in 2024, slightly up from its previous forecast of 930,000 barrels per day. And talking about the US dollar, that dropped to a 4-month low since August, and this is after the Fed indicated the rate hikes were over. Now, a weaker dollar, it means that the oil will get cheaper, which can lift demand. So the gains this week has been a brief respite from what we have seen, the brutal fall that we saw for the oil prices, because oil prices, they have plunged more than $20. That is from the September highs, which was owing to the weak demand coming in from China. So that's about the crude oil. If I look at the WTI oil prices, that's trending about $71 per barrel, and even Brent crude, that is about $75 per barrel. And talking about gold, it's hovering in that $2,000 ounce per range, but it touched its 10-day high at 2047. dollar. So that is because the Fed hinted at lower US rates next year. And talking about the Bitcoin, even that's above a 43,000 level. But what are the important cues that we have to keep an eye on, Snehi?
Absolutely, there are lots of important cues and lots of important data points to watch out for. Let's start by looking at the US. You've got the industrial production data coming in, as well as the S&P Global Manufacturing Services data, as well as the composite PMIs data coming in today. Shifting focus to UK then, you've got the S&P Global or the CIPS Manufacturing PMI data also coming out today. Eurozone then, S&P Global as well as Global Manufacturing PMI, S&P Global Services PMI, as well as China Industrial Production will be out today. Shifting focus back home and talking about the primary markets then, today is the last day to subscribe for DOMS Industries as well as India Shelter Finance, and the second day for Inox Energy. Now also shifting focus to some corporate action then, you've got Gandhar Oil that will be in focus on the back of its Q2 earnings. Orient Green will also be a counter that will be in focus today because the board will be meeting to mull a proposed issue of shares, and Bank of Baroda will also be mulling fundraise today, so keep an eye out on all of these counters as well.
Right, and as I just mentioned about the crude prices rebounding and the global recession fears receding, Singapore GRMs, they are at their highest level since September. Now, what does this mean for the refiners? What impact will it have on which companies? Somit is here with more details. Good morning, Somit. Take us through all these details.
Well, all the oil marketing companies, that is Indian Oil Corporation, BPCL, HPCL, would remain in focus given the fact that the Singapore gross refining margins have surged to a September high of around $9 per barrel. Now, for continuously last 3-4 trading days, Singapore gross refining margins have been continuously moving up, and from the October lows of $1.5 per barrel, if you see, Singapore gross refining margins have jumped nearly 6 times. Now, this is largely on the back of the fact that all product prices are gaining when it comes to Singapore gross refining margin, and this is because the recession fears globally have receded, and that has led to the surge in product prices, and hence Singapore gross refining margin is now trading at around September highs. Now, which companies stand to benefit? As I was mentioning, the oil marketing companies, that is Indian Oil Corporation, BPCL, HPCL, along with that Reliance Industries, MRPL and Chennai Petro, all these companies tend to benefit because generally a $1 per barrel rise in the gross refining margin boosts MRPL's EBITDA by nearly 1,000 crore rupees on an annual basis. Chennai Petroleum's EPS increases by nearly 30% on an annual basis, while that of Indian Oil Corporation, BPCL and HPCL, now their EPS increases by anywhere between 14 to 60% on an annual basis. And when it comes to Reliance Industries, their consolidated earnings also includes retail and telecom. So on a consolidated basis, if you see, their earnings increases by nearly 4 to 5%. So keep an eye out for these companies in trade because if Singapore gross refining margins continue to trade around these higher levels of around $9 per barrel level, these companies would definitely see a higher earnings number when it comes to the third quarter of FY24.
All right, Swami, thanks so much for taking us through that. Refiners will be in focus today on the back of that. Now, let's move on to some action coming in from central banks globally, and let's start by talking about the Bank of England. Because after Indian and US central banks, the Bank of England has also decided to leave key rates unchanged at 5.25%, that too for the third time in a row. Analysts and investors were expecting the same from the central bank, so that's come largely in line with estimates. But the key commentary to note is the bank's commitment to work to curb inflation back to 2%, for which, and I quote, policy will need to be sufficiently restrictive for sufficiently long, unquote. They also warned of further rate hikes if inflation stays sticky in the region. Inflation is forecasted to be under 4.5% for the year of 2023.
Meanwhile, no surprises from the European Central Bank either because the ECB has left the key rates unchanged at 4.5% in its December policy. The Christine Lagarde-led central bank said it expects inflation to cool off going forward. The ECB also said that it will ensure that policy rates are set at sufficiently restrictive levels for as long as necessary. Now, let's listen to what ECB President Christine Lagarde said on this.
The Governing Council today decided to keep the 3 key ECB interest rates unchanged. While inflation has dropped in recent months, it is likely to pick up again temporarily in the near term. According to the latest Eurosystem staff projections for the euro area, inflation is expected to decline gradually over the course of next year before approaching our 2% target in 2025. Overall, staff expects headline inflation to average 5.4% in 23, 2.7% in 24, 2.1% in 25, and 1.9% in 26.
All right, and with rate cuts on the anvil, how will it affect global money markets? And for that, the insight on that, Manish Rangi, the founder of Macro Mosaic Investing and Research, shares his take. So listen into what he had to say.
What Fed does is what US rates will do. And therefore, we are entering in a very longish bond rally. And much of the pain of 2022 would unwind in 2024. I think. On currency also, we are perhaps entering in a very longish dollar bear market. And there is a small chance that, dollar actually does somewhat well in US recession, but otherwise in a very, very long US bear market. And that will actually help us, emerging markets, currencies pretty significantly. I think if the US rates drop meaningfully, as I think they will, and the currency actually behaves in the manner that I anticipate, it's very likely that a significant amount of flows will return in bond markets, which in turn, be it equity or debt, wherever money comes in, it actually depresses the volatility, depresses the risk premiums, and therefore improves the return profile for investors.
And strong economic data coming in from US. The retail sales in the US unexpectedly increased 0.3% month-on-month basis in November, and this rebounded from a fall in October, and it beat the market forecast as well. Data suggested a strong start of the holiday shopping season. Meanwhile, in another data point, mortgage rates, it fell below 7% for the first time in the US since mid-August. Remember, this is the 7th straight week that the rates have declined, and that was led by easing inflation as well as Fed's dovish stance on rates.
And on to some macro data from Japan then, as it released the factory activity data, which has narrowed for the 7th straight month in December, while the service sector made modest gains as weak demand and price pressures capped growth. Remember, it was the fastest deterioration in the last 10 months in the index, which has remained below the 50 threshold.
General Motors plans to lay off around 1,300 employees at 2 Michigan auto factories starting early next year. Now, this comes on the back of production cuts. Meanwhile, reports suggest General Motors Cruise has also announced laying off around 24% of its workforce as the self-driving car unit makes effort to reduce the spending over safety concerns.
And while a major deal has brewed in the global alcohol space, Italy's Campari is set to buy the historic French cognac house Courvoisier from Beam Suntory for $1.2 billion. This marks a big push with Campari's biggest acquisition ever. Now, Courvoisier is the 4th largest cognac producer globally after LVMH owned Hennessy, Remy Martin and the USA.
And amidst a raging war in the Gaza Strip, the war in Ukraine continues. And in a show of support, European Union leaders have decided to initiate membership talks with Ukraine despite Hungary's previous objection. President Zelensky's response was filled with gratitude as well as optimism. His view is that this is a triumph amidst a period of adversity and strife.
Well, onto the conflict in Gaza then. Tensions in the Middle East continue to escalate amid the ongoing conflict. A day after rejecting a ceasefire, a US envoy has stressed the importance of precision in military strikes. In high-level discussions with Israeli officials in Cairo, the US envoy urged that IDF needs to minimize civilian casualties in the fight against Hamas.
And those were the global stories that we highlighted. But with that, let's slip into a short break. But stay tuned as we mark the Asian market post the break.
Hi there, welcome back and thanks so much for staying tuned to ET Now. This is Market Cafe. Now, the insurance sector could come under pressure as the IRDAI draws a new draft on regulations and proposes higher surrender value in life insurance. Anurag Shah is joining in with more details on this development. Anurag, take it away.
This is a major development in life insurance space. Insurance regulator IRDA has come up with a draft exposure draft related to the product regulation in life insurance sector, and which mentions the change in formula to calculate surrender value and surrender charges of life insurance product, non-par life insurance product. So as per the exposure draft, the surrender value will increase and surrender charges will decrease. So it will be beneficial for policyholder, but will impact the margins of life insurance companies in their non-par segment. Although this is an exposure draft, so final draft paper, final rules will be implemented after the consultation with all the stakeholders, and life insurance companies will also put forth their viewpoint related to this exposure draft. But indeed, it's a very big development as far as related to the life insurance space, where a formula to calculate the surrender value and surrender charges in non-par insurance product will change, and which will benefit the policy holders.
Thanks, Anurag, for all of those details. And he also spoke exclusively to BC Patnaik, the member of the IRDAI, on draft of surrender value for life insurance products. So let's listen into a slice of that chat he had.
Intent is always for the common good of people, policyholders, and for the entire ecosystem. So a lot of actual calculations go behind it, and depending on the calculation on certain kind of products, not all products like that, certain kind of products. So there is a thought process going on, and it will be discussed, deliberated, and what will be the best solutions available, so that will be adopted. So these are the things. So it is now too premature at this stage to come to any conclusion on all these things. So it's an ongoing process, whether it is processes for claim settlement of maturity claims, death claims. So these are all
So sir, this will be beneficial for the policyholders, because we see that in most of the time after 3 years, policyholder get the surrender value in a very less amount. So it will impact the policyholder. The persistency rate in life insurance will go up, and the overall surrender value will increase.
what happens is whoever that means manages certain affairs, they take into account the views and benefits of all stakeholders. So, and policyholders' stake is definitely important, because they are large number, and but at the same time, all stakeholders' views are taken into account, and accordingly decisions are taken. Okay. So it's an ongoing process. So for many things it happens like that.
So it's an exposure draft, and you will take consultation from all the stakeholders like insurance companies, like agents and policy holders. And by when it will get implemented, sir?
The process is there. So normally nobody should rush into processes. So the processes should go on, and it will take its own time. Yes, but and it normally happens usual time what it takes for all other things.
Well, let's get a move on then. And the government has reported a significant surge in net direct tax addition, marking a remarkable 23.4 increase on a year-on-year basis. Now, from the 1st of April to the 30th of November, the net direct tax collection soared to 10.64 trillion rupees. The gross tax collected before adjusting for refunds stood at an impressive 12.67 trillion rupees, showcasing a robust 17.7% growth compared to the previous year. Moving on then, following several hours of deliberations, the representatives from 28 countries and the European Union have adopted the New Delhi Declaration of the Global Partnership on Artificial Intelligence. With this, the GPAI member countries further affirmed their commitment to continue to work within their respective jurisdictions to advance safe, secure and trustworthy artificial intelligence. ET Now's Sumit Chaturvedi caught up with Rajiv Chandrasekhar, the Union Minister of State for Electronics IT, on its impact and implications for India. Listen in to a slice of that chat.
No, look, I think I must say, without being too bombastic about it, I think our Prime Minister has seen two things way before many other countries. India has talked about the power of technology to transform people's lives, and that is something that every country is now beginning to line up and realize as well. India has also talked about since 2021 the need to have guardrails and legal accountability for platforms on the internet, including but not limited to AI platforms, that will ensure that our citizens are always safe and the citizens always see the internet as a safe and trusted platform, and any other platform on the internet as being safe and trusted. So I think those broad principles that India has long articulated is gaining wider and wider acceptance. Under the Indian presidency of the GPA, I am confident, Indian chairmanship of the GPA, I am confident that over the next 5 to 6 months, these 29 countries will come together and to create what will be a very practical, pragmatic framework that will ensure safety and trust of AI on one hand, and collaborative AI to create the next generation of AI ambitious platforms and applications that will help all the people of the world over the next 3 to 6 months.
And how does it address the concerns of Global South when it comes to AI?
No, we have insisted. I think you will find that Prime Minister Narendra Modi ji during the G20, when he talked about the DPIs, talked about the fact that technology must benefit the countries of the Global South. That technology must be accessible by the countries, the smaller countries of the Global South. And we hold that view and we hold that principle very close to our heart. And we have articulated that in the GPA Ministerial Council. And you can see in the declaration that that is reflected in the Ministerial Declaration as well.
All right, that's the word coming in from Rajiv Chandrasekharan. But as we head into a brand new year, let's take a look at how India shopped online this year. E-commerce was all the buzz this year, and my colleague Ankita is joining in with a breakdown of a report by Bain Capital. Ankita.
Well, e-retail has been a disruptive force in the global retail. In fact, online-first retailers now make up to 2/3 of the sales generated by the 10 largest global retailers, which is a threefold increase over the last decade. Now, the COVID-19 pandemic has been an inflection point for the retail adoption globally. The surge in online shopping induced by the pandemic has largely persisted across the markets. In fact, this year we will examine the 5 major themes that are shaping e-retail in India. First being the long-term growth fundamentals, second being the shopper micro-segments, third being the emerging business models, fourth being the focus on profitability, and of course the growing role of cutting-edge artificial intelligence. Now, India's long-term growth fundamentals look rather robust. India's e-retail market is estimated to scale to $57 to $60 billion in 2023, adding $8 to $12 billion annually since 2020. Also, India's annual transacting e-retailer shopper base is estimated to scale to 230 to 250 million people in 2023. Over 100 million of these shoppers were added just over the last 3 years. Now, diverse consumer microsegments have also become more salient. Now, 7 out of 10 online shoppers reside in Tier 2 cities, and a third of the online shoppers are a part of Gen Z, and a third of online shoppers come from the lower income cohort. Now, catering to these segments, we also saw the emergence of 4 new business e-retail models. First being the quick commerce, second being the hyper-value commerce, third being the inspiration-led commerce, and fourth being the fast fashion. And finally, the role of generative AI will fundamentally alter the e-retail experience. A series of high-impact use cases are emerging that will positively impact the shopper and the seller's journey. E-retailers are looking at the technology to disrupt 5 major areas, being discovery, seller enablement, target marketing, customer support, and business efficiency, amongst the others. Now, the next chapter in India's e-retail growth promises to be even more exhilarating as the industry pushes boundaries and pioneers new frontiers.
Some interesting takeaways coming in from all the e-commerce activity in the year that went by. Thanks, Ankita, for all of that. Moving on then, Federal Bank has completed 50 years of services in Kolkata. My colleague Ankur Mishra spoke to the bank's MD and CEO Shyam Srinivasan on the bank's expansion plans. Let's listen into a slice of that chat.
We are clear that this growth should continue. As you noticed, our growth has always been fairly sort of even pace. We don't want to do things in fits and starts. In this part of the country, we were a pioneer, particularly in Northeast. In the early 70s, our bank's founder had moved and set a reasonable presence, because at that point in time, many of the Kerala-originated Christian missionaries were setting up presence in the Northeast. So the bank followed that. So it did give us a presence in this part of the country. And then, like I mentioned, CR Avenue was our first branch 50 years ago.
Right.
We do see this, material opportunities coming up. At the end of the day, we are still a 1.2, 1.3% share bank in the country. So the growth opportunities are infinite. That's at a country level. If you take this part of the country, our share is like 0.6, 0.7%. So getting this to our India share,
Right.
it is a doubling opportunity. So we think this is a growth opportunity for us for many quarters.
You also mentioned about being the top 5 private bank in the country, and of course that aspiration is important. What are you working on to achieve that? Which are those pockets where you see that kind of growth?
See, our growth has been dominated by a strategy which is boring, but this is what we have chosen, which is to be diversified across products, geographies, and segments, which means nothing dominates, right? We want to be diversified because it insulates us from any kind of adverse outcomes in any one. It's a good balancing act is always good. With that said, in many of our newer geographies, we are still a small share player. So every year, if we keep expanding our footprint by 5-7% and growing our business by 20% and getting our profit share up by 25%, we are on the course to making sure we are achieving these objectives.
Any particular pockets you want to highlight also in terms of sectors where you see that there is more growth opportunity?
There are some businesses where we are relatively smaller, right? In the retail side, if you take businesses that are like credit cards for salaried or personal loans, we are a much smaller player. Microfinance, commercial vehicles, we are a much smaller player. So these are large growth opportunities. Likewise, in the small and medium business size, commercial banking business, we are relatively smaller size players. So we see opportunities to scale up. That's why I keep saying for us, when we are a 1.2% share player, growth opportunities are not in one geography, one segment, one product. It's spread wide. And that's the exciting part.
Well, let's get a move on then. And a number of rebalancing activities are on the radar for India. Somit is here with all the changes expected and the implications for that for India. Listen in.
Well, multiple rebalancing events tomorrow. In fact, to be precise, 3 of them. Firstly, when it comes to the Dow Jones ESG index, Embassy Office Park REIT, JSW Steel, UPL, Godrej Properties and Macrotech Developers are being added to the Dow Jones Sustainability Emerging Market Index, while in the Dow Jones Sustainability World Index, 3 stocks are getting added, that is JSW Steel, UPL and Dr. Reddy. When it comes to FTSE, around $525 million of inflows are expected in selected stocks. Firstly, it's Nexus REIT, where around $9 million of inflow are expected to come in, which is nearly 28 times its average daily volumes. In Mankind Pharma, around $28 million of inflows are expected, which is around 5.5 times its average daily volume. Now, these 2 stocks are getting added into the FTSE indices, while there are few stocks whose weightages will increase in the FTSE index, and that is HDFC Bank. Firstly, $451 million of inflows are expected in HDFC Bank, around 1.7 times its 20-day average volume. Apart from that, there is Sheela Foam and Nazara Tech, which could see inflows of anywhere between $1 to $3 million. Now, a couple of stocks where the weightage could reduce, that is 361 and Delivery. Outflows of around $3 to $10 million are expected. And the last rebalancing event would be in the BSE 100, which is a very actively tracked index of the BSE, and there are 7 stocks that are getting added in the index, that is PFA, Hindustan Aeronautics, TVS Motors, Yes Bank, Persistence and APL Apollo Tubes and IDFC First Bank. And 7 stocks that are getting excluded from the index are Adani Power, Tata Elxsi, Emphasis, Voltas, CG Consumer, Bandhan Bank and ACC. So keep an eye out for all the stocks in trade, because there could be some movement in trade given the fact that there would be inflows and outflows in these stocks.
All right, a whole host of counters will be in focus on the back of that. Thanks, Somit, for taking us through that. But with that, it's time for a breather on this edition of Market Cafe. You don't go anywhere. We'll be right back with more news and updates. Hi there, welcome back and thanks so much for staying tuned to Market Cafe. We have a bunch of initiation coverage notes on mid-cap stocks from brokerage houses like IDBI Capital, Prabhudas Lilladher as well as Spark Capital. My colleague Gaurav is here with all of those details. Gaurav, good morning. Take it away.
So, hi Snehi. So, the first stock we have is Sonata Capital, Sonata Software, where we have IDBI Capital, which has initiated buy rating, initiated with buy rating and a target price of 915 rupees per share. Now, they believe that the company is focusing on investing in sales and marketing. They are also strengthening their platformation framework, and they are likely to be a key growth driver for the company going ahead. Company also aspires to double their international services revenue till FY27, and above that, the strength in digital platform. There is a traction in large deals for the company, and the tier 1 hiring are likely to be positive catalyst for Sonata, and that is why IDBI Capital has maintained its buy rating and a target price of 950 rupees per share. The next one we have is Arvind Capital, where Spark Capital has initiated with buy rating and a target price of 352 rupees per share. So the company has undergone through several transformations in its textile business, which is actually in line with the industry. They also believe that the change in segment mix and operational leverage will help the company to achieve 18% CAGR in its EBITDA going ahead. And they also believe that the company has low interest cost from now because they have debt repayment systems going on, and on back of this, the earnings could grow by the CAGR of 31% over the next 3 years, and that is why Spark Capital has initiated with a buy rating and a target price of 352 rupees per share. The next one we have is Digvi Talk, where Prabhudas Leeladhar has initiated with the buy rating and a target price of 1300 rupees per share. So the company is actually niche IC segment component player, and they are also foraying into EV segment. Now this EV transmission is going to ramp up their revenue sharply according to Prabhudas Leeladhar. They also believe that there will be sharp increase in exports when it comes to component business, and on back of this they are expecting revenue and PAT to grow with a CAGR of 35% and 30% over the next 3 years, and that is why Prabhudas Leeladhar is again bullish on this stock with a target price of 1300 rupees per share.
Alright, Gaurav, thanks so much for those takeaways. Those stocks will be in focus on the back of those initiation notes as well. Now let's refocus and look at some brokerage notes on the insurance sector. And you've got notes coming in from Jefferies, Kotak Securities as well as Morgan Stanley. Vamakshi is standing by with more details and the key takeaways from these brokerage notes. Vamakshi, good morning. Take it away.
Well, yes, we have a whole host of insurance counters that will be in focus. Now, keep in mind that they were in focus yesterday as well, and they continue to be in focus as brokerages have come out with the probable implications on the insurance industry if the surrender value increases. Now, Jefferies has highlighted that the new concept of threshold premium may increase the surrender values, which inversely could trim fees for insurers. This is still at a consultation stage, and final terms will be definitely based on deliberations. They believe that insurers could offset some impact by lowering cost. Now, keep in mind that non-ULIP savings products form nearly 40 to 45% of premiums and VNB, and in fact this share is much higher for Max Life as well as HDFC Life and is lower for SBI Life. Nevertheless, they believe that this could be a big overhang for the insurance company. Now, Kotak has highlighted that the caps on surrender penalties will actually have a definitive negative impact on life insurance companies' VNB margins. However, they believe that since there is no clarity with respect to specific ratios in order to that will be considered to calculate the surrender values, it is too early to assess the impact on life insurance companies. Apart from a lower surrender income, the risk of a lower persistency still looms on the non-par business. They're expecting streamlining distributor payouts, however, to partially offset the impact that would come through. Lastly, let's also focus in on what Morgan Stanley has highlighted. They too believe that HDFC Life has the highest share of non-linked business in its APE, followed by ICICI Prudential Life and SBI Life. They believe that there are multiple mitigating options within the industry, and IRDA has not been prescriptive, and the industry will definitely give feedback. So as of now, brokerages are assessing an impact on the VNB margins, as well as they're also expecting some streamlining of distributor payouts. So largely on the back of that, keep an eye out on insurance stocks.
Thanks, Vamakshi, so much for taking us through that. Insurance will be a sector that will be in focus today. Let's shift focus to some other news that we've been tracking for you this morning, starting with political news then. Probe in the shocking parliament security breach picks up pace. The alleged mastermind Lalit Jha surrenders at the Delhi police station. Further interrogation is underway as we speak. Meanwhile, opposition continues to demand Union Home Minister Amit Shah to issue a statement in Parliament. This even as the ruling BJP urges opposition to not politicize the breach. Moving on then, the opposition ups the ante against the centre in the aftermath of Parliament security lapse. TMC MP Derek O'Brien will observe a silent protest till the end of the Parliament session. Opposition leaders demand Prime Minister and Home Minister's statement on the floor of the House. Moving on, Rajasthan CM-elect Bhajan Lal Sharma is all set to take oath today. The swearing-in ceremony of the Chief Minister will begin at around 12 p.m. Prime Minister Narendra Modi, along with several union ministers, are expected to be in attendance. Bhajan Lal Sharma is a first-time MLA from the Sanganer constituency and General Secretary of the BJP unit in Rajasthan. Shifting focus from politics then, Ennore Creek under threat after the disastrous oil spill in Chennai. The National Green Tribunal reprimands Chennai Petroleum Corporation over the delayed action. Central Oil firm promises to clean 95% of the oil spill by Sunday. And shifting focus to sports then, India thrashed South Africa by 106 runs in the final game of the three-match series. They leveled the series 1-1 each as captain Surya Kumar Yadav hits a century and Kuldeep Yadav picks up 5 off. The ODI series will start next from the 17th of December. Well, with that, we're completely timed out on this edition of Market Cafe. From me, Snehisha, and the team that put this show together, thanks so much for watching.